Hey, my two friends, welcome back. Welcome to another episode of Next Small Bet. In this episode, we're going to talk about AMD stock. Is it a buy the dip opportunity for AMD stock, especially considering the stock price has dropped more than 20% from its highs? Let's compare AMD with NVIDIA and find out in this video. So first, a few assumptions. The assumption is the reason of choosing AMD as the second AI chip maker in the world, catching up with NVIDIA instead of just buying NVIDIA stock directly is that NVIDIA's market valuation is really, really high now. It's just the second to Microsoft and Apple. It's a very close third place. The company's valuation has already surpassed $2 trillion. There isn't really much headroom for NVIDIA to keep growing, say, 30 or 40%. Instead, AMD, as the second largest graphic card GPU maker in the world, it has its AI solutions. It has its counterpart of NVIDIA's most advanced AI accelerator, data center accelerator, H100, A100, H200. AMD has its counterpart like MI300, MI300X, or even MI400. So if AMD, currently sitting at 1/10 of NVIDIA's market capital, could be 20% of the valuation of NVIDIA, that would be an insane run for AMD in the next couple of months. And that's our assumptions and expectations, why we're even discussing this topic to buy AMD instead of NVIDIA. So let's find out if that's a viable plan, if that plan actually makes sense. So first thing, let's check out the market share of the data center accelerators market. We know NVIDIA must have taken a big part of that, and this is the most profitable sector across all the business, the GPU business and the chips business of NVIDIA, of AMD, of Intel, if you name that. So how much exactly has the market been taken away by NVIDIA? The result is insane. So Wells Fargo's research estimates that NVIDIA currently has a 98% market share in data center GPUs. That's ridiculous, right? So AMD is sitting above like 10 to 15% of the market valuation of NVIDIA, but its market share of data center accelerators is actually less than 2% as of now. The analysts estimate, however, that AMD and Intel are both making up ground, with NVIDIA's market share expected to drop to between 94 to 96% in 2024. So this year is 2024. As we just mentioned, AMD provides its own AI solutions, its own data center accelerators chips, the MI300 series, and in the future, the 400 series. But even count that in, and in this year, NVIDIA is still going to hold the market share up to 94 to 96%. Data center chips are making pretty significant progress, though. So according to this news, AMD data center segment sets internal revenue records as GPU sales exceeds expectation. So AMD's data center segment has become the company's largest business unit with year-on-year growth of 38%, according to its Q4 2024 financial results. And the MI300 series is pretty strong GPU, or as data center accelerators. Its CEO, Lisa Su, said that the vendor's new MI300 GPU is now tracking to be the fastest revenue ramp of any product in their history. Speaking on a call with analysts, Su said AMD's data center CPU business accelerated significantly in the quarter, with revenue exceeding our 400 million expectations, driven by a faster ramp for MI300X with AI customers. And from other news, we know that Microsoft is one of the biggest AMD GPU MI300 series customers. They're equipping MI300 in their Azure data centers and their virtual machines. And AMD said it is expecting to see a $2 billion in server GPU sales in 2024. The figure, the company revised to $3 billion as a result from its Q4 results. So that's pretty significant increase too. But even all factor those in and consider the growth of the AI accelerators, AMD still has a very, very high forward PE ratio. So according to the Guru Focus website, which is a company fundamental fact-checking website, it indicates that as of today, we see the market capital of AMD is sitting at $264 billion. The forward PE ratio is 48.81. It's much higher than If you compare that with NVIDIA's forward PE ratio, even though NVIDIA has very, very high market capital of above $2,185 billion, its forward PE ratio is still sitting at 30-ish, like 36.33 as of today. And that compared with the 48.81 forward PE ratio of AMD. Even though AMD is growing its data center accelerators business really quickly, and the MI300 series seem to be very attractive to many of its AI customers, I wouldn't say AMD stock is a bargain for now, but if it keeps dropping, then maybe there's a buy the dip opportunity, is a better buy the dip opportunity than it is now. So the trading plan for me is that if NVIDIA has the buy the dip opportunity, if its stock price dropped near 800 or what's better below 800, I think most probably many potential buyers who missed the big rally of NVIDIA will quickly jump into the stock, considering its profitability, considering its very, very promising outlook and the super hot AI chips market. So the plan for me is the same. I'll most probably buy the dip of NVIDIA instead of at the current stock price jumping to too much of AMD. But if AMD is continuously making significant progress in its like AI data center accelerators, the AI chips, if AMD stock price keeps dropping to a point where it feels like its future growth potential worth the stock price, then it's a different story. All right, that concludes the video. If you like the content, please like this video and consider to subscribe to the channel. I'll see you next time.